And also from the founder side, I think there's a lot more emphasis on governance, trying to do the right things, putting the right professionals in place such that, you don't lead up to a place where suddenly people find there's a big hole in the balance sheet. I would say that we are still in a good, optimistic place. I think the fundamentals in India are generally still good. From a regulatory standpoint, I will say that world over, regulatory agencies are becoming more and more watchful, right? And it's not just the SEBI. The startups have to think about not just laws in India, but they have to think about their markets wherever they may be and how their regulators are thinking. I mean, there's a lot that can be done, and diverse boards built for better companies, right? I don't think I'll ever stop being a lawyer, but I want to do other things that can also be useful to society.
Hi, I'm Maya Chandrasesekaran, representing the Women in Investing Network today. And before we get started, I wanted to do a quick shout out to Waterbridge Ventures for allowing us to use this lovely studio space. Waterbridge has been a long-time friend and supporter of the network, and we're always grateful for the help that they provide. So let's get into today's podcast. Today, we're taking a slightly different direction. Usually on our podcast, we talk to fund managers, capital allocators, and understand a little bit more about their journey, their thesis, and their focus areas. Today, we're actually going kind of to the side to be talking to someone who's been working with capital allocators and startups for over 20 years and supporting both of them on their journey. So I'm very excited to welcome today Kosturi Ghosh from Trilegal. Kos, welcome to the podcast, and thank you for joining us.
Thank you so much. It's very nice to be here. Fantastic office and a great studio setup. So thank you, Sapna.
So before we get started, Kos, I think it would be great to get a little bit of context about what you do at Trilegal, your journey, and how that intersects with the overall startup ecosystem.
Sure. Thanks, Maya. I've been a lawyer now for more than 23 years. Started out, thinking that I would do IP. That's why I came here to Bangalore. But the startup ecosystem I started to work with made me believe that I could do much more than that. So, my first client, for instance, was a healthcare life sciences company, and we helped them raise funds, and we did several rounds of funding for them, and they finally sold out in 2020. So I've actually seen the life cycle of a company that broke out of IISC, kind of came out of their incubation model and then took the commercial route and then finally managed to find an exit. So that's what excites me. That in a nutshell is what I do. Is I work with startups, I work with funds, and we help both of them find the best legal outcome. Now that's not always the best commercial outcome, but certainly as a lawyer, my job is to ensure that the work of the startup and the PE funds or the VC funds, they intersect in a way that they are able to find the right outcome, which is either an exit or an IPO or, a strategic sale. So I've been with the firm for now over 23 years and in Bangalore City. So it's very exciting to be here. It's been a big change from the time that I got here.
To see everything that's happened.
Yeah.
Okay, so I'm going to dig into each one of those in a bit, but I think the immediate place to go is 23 years.
Yeah.
You talked about Bangalore. There's been a journey along the way for Bangalore. Let's talk a little bit about what's changed
in the city. A heck of a lot, but in terms of the ecosystem, also a heck of a lot. When we started to work with funds at the time, the mindset was always, let's take a minority stake. Let's only look at, 10-15%. What are the kind of rights that we want alongside that? Or we don't want to get too involved in the business because we don't want the liability. We don't understand that. So there's been a huge shift from that to what it is today, where the founders have become a minority in the company. Such a large portion of the company sits with the investors now, to even a state where the VC funds or the PE funds are willing to be named as a promoter in an IPO. That's a huge mindset change. Now there's buyout funds, there's secondaries funds. So just the ecosystem has evolved with the maturity that you now see in the West. So between, the kind of deals we are doing in India, the kind of deals my contemporaries are doing in the US or in Europe, we are able to actually talk the same language now, which I think is fascinating. I didn't think we would get there this
and it's been
fast.
Quite accelerated. right?
Exactly.
Compared to the 50 years that it took in other kind of geographies to get here in 2023.
That's absolutely right. And I think this is maturity of both the funders, the allocators of capital, as well as the promoters. I mean, there's of course been some bad examples along the way, but I think the bad examples have led to people changing the way they think about capital allocation to begin with, which basically means doing more work on diligence, ensuring that they have the proper set of rights in place, and not just the rights, but exercising them at the right time. And also from the founder side, I think there's a lot more emphasis on governance, trying to do the right things, putting the right professionals in place such that you don't lead up to a place where suddenly people find there's a big hole in the balance sheet. So I think that's really a great hallmark of where we are today.
So along those lines, you gave us one example of a company that you've really seen, as you said, literally from incubation all the way to like final exit. There are many others that you've worked with which may not have had quite as successful outcomes. So what are some of the things you have seen that founders maybe make mistakes on, either in the early days or as they're growing? Because I think each one of those is quite pivotal. There's no specific stage that is actually more important than the other.
No, I think that's a very good question, because in the race to become big, people make a lot of mistakes, right? So the focus on building the basics is sometimes lost in the, let's say, the race to set up more, open more outlets, or to reach more customers, and especially in the the B2C or the D2C space, that is very, very hard to achieve anyway. But I think some of the mistakes that I believe that founders can avoid is, again, now there's no lack of capital. So again, putting in place this, the fundamentals around governance, making sure that they have a company secretary on board, who's making sure that all of your filings are done correctly. When you're raising funds, make sure that your documentation is proper. I know there's a tendency to go for whatever agreement they can enter into, not doing enough work on what are the specific rights that they would like to keep for themselves, versus only talking about, this is X money that's coming in. I mean, we all know that when capital comes, it comes with strings.
It comes with
So, people have to, of course, make accommodations for that. But I think it is equally important, and I see it more and more, because a lot of the founders we work with, we tell them, when you are starting, let's say you are the majority of the company. So, when you are dealing with shareholder resolutions, things like that, you are in the driver's seat. But as you raise more capital, your stake is becoming much smaller. So do you want to actually preserve some veto rights for yourselves? And again, that's another evolution that I have seen, that where veto rights used to be the domain of the investor. Now there is equally pushback from the founders to say that yes, we would like some very important matters in relation to the strategy of the company, the future of the company, to also be in our hands,
to still be held by
exactly
us.
Exactly. So at every stage, I think the promoters have to really take a step back and not chase capital necessarily, but chase the investor who is going to support them in their journey. So, I tell a lot of the clients also that you should do your work on the diligence of the investor. It's not just they doing it on you. Can you go out in the market and see what experiences other founders have had? And it's great in Bangalore. Founders are always talking to one another, right? You walk into a coffee shop, I'm sure you'll find 5 founders and a good reason to have a chat. So I think the founder network is very strong, and they should leverage that. Absolutely. Exactly right.
It's very generous with time and insights.
Absolutely. And there's a very natural mentorship that I think happens over the stage of, which series have they raised. So I think that's great. So use that leverage. Get your documentation right. It's okay to say no to the investor once in a while, right? And to say that this is the logic with which I would like to, reframe the exit clause. Maybe they'll say no, that's fine. But if you never ask, you never get. So I think, these are some basic ideas that they should think about. Even within the founder team, if there are 2-3 people, how do you allocate the equity? How do you decide who's got what role and responsibility? I think it's very important to articulate that in writing. Too often I see people have just come together, sure, it's, you start up in a garage, great, but you got to move beyond that, right? You got to get your documentation right and make sure you're building for stability, because of course, things happen, you fall out with other founders. You should have a mechanism to ensure that the company is not being held hostage.
That the company is stable, right?
Exactly.
Yeah.
Exactly.
And along those lines, that's kind of along the build journey. Now, obviously there is a lot of activity in the market. So when we think about exits, especially M&A, what are the things that founders, again, should be thinking about, should be aware of? What are the mistakes that you've seen people make?
Yeah. So, I mean, in terms of exits, it's a process that takes a fair bit of time. And I think patience is key. You don't necessarily expect that as a founder, because everybody's sort of, they've run up the capital chain to a certain space, and then they're like, oh, but exit should come in a natural fashion. But the market is very different. There could be various circumstances around why you need to do an exit in the first place. But I think some of the things that are important to remember is that, you've of course, used your blood, sweat and tears to build this business, but holding on too dear is also not going to help you, right? So you have to be pragmatic about the kind of exit you want, the kind of exit your investors want. You've got to be able to reach out to multiple people, see what the strategic fit is. You've got to be able to take a rational call that beyond this, I'm not able to find capital. So therefore, my best bet is to therefore do a strategic partnership where, let's say, I'm able to work with another bigger brand and maybe do rollover of my equity a little bit if I feel like I've not got enough in, as a part of this exit. So there are multiple options now in the market that are available to you. So exit does not mean just a full 100% exit anymore. So, there are various things that founders should be willing to look at and to consider. And then, of course, when you come to the actual stage of doing the M&A deal, again, as a lawyer, I'll always say the documentation is everything. Right. Make sure your diligence is in order. You should do your own, work or homework before the investors come in to do their diligence, right? Make sure everything is in order so that you have a smooth closing. Oftentimes you find that, at the last minute, there's been one very important filing that has gotten missed out and, you can't close the deal. Then, you get pushed out 3 months, you have to set it right. Let's say it's
then deal fatigue
sets in. Then people are like, is this really even worth it? Time is money, blah, blah, blah. So it's very difficult then at that stage to find fixes. Yeah. Some small things, yes, of course, those can be fixed. But again, pragmatic hat. I think that's always key. And getting professionals in the pipeline, right? Make sure you're building that relationship with your lawyers, your company secretarial teams, bankers, whatever may be, the choice of people that you want to hire, but at least make sure they're in the know, such that they can prep you. Right. And it's, things don't come as a surprise when you get a long DD checklist from the investor. You are not sort of balking at that and saying, this is too much. How do we do this? How do I manage this now? Yeah. So, it's good when founders have gone through the investment rounds because they get prepped for these types of questions. But, having a strategic buyer come in is a very different lens.
Really? That is something that I was actually going to question you on. Right? Because our assumption is that as institutional investors, that's precisely one of the things that we do. Yeah. We are prepping companies for the next round of diligence and making sure that ultimately they're able to get into the market. Yeah. So what is the difference that you will see?
So the way a PE will approach a funding round versus a strategic buyer will approach a company are quite different, because for a strategic buyer, they're looking at the synergies that they can get out of this business that they will acquire, right? So their diligence level is very different. They have got to be able to understand whether this company fits into the overall, schematic that they have in place. So the way they look at contracts is very different. The way they look at, can they merge the supply chains in a certain manner that works for them? What are the potential cost-cutting exercises. What are the efficiencies that they can build in? Are there 2 factories? Could there be 1? Right? And that has a different issue in terms of dealing with labor, dealing with regulatory agencies, things like that. So the mindset is very, very different. Plus, the threshold of risk can also be different based on who is buying. So, these are the things that I think, founders need to be aware of. And just simply comparing 2 term sheets, it's not apples to apples, right? So there has to be some lens that has to be applied differently.
Got it. I think that's very interesting, which is, as you said, the strategic investor is looking at this as, this is a business that I am going to be operating and running, versus the financial investor was saying, this is something that I'm going to be capitalizing, and then somebody else will.
That's right. So, exactly. I just want to grow it to the next level.
Exactly.
That's what the PE guy is thinking.
End point for
That's right. That's right. Yeah.
I think that's a really good point to actually switch tracks now and kind of put on your other hat, because you are both an advisor to founders and to funders.
Yeah.
And at the same time as a lot of M&A activity, there is also, at this point, a very, very active IPO market in India. So what are you seeing right now? Any predictions? Is this going to continue? Do you see a slowdown? How does this? It's hard to tell because of what's going on in the world.
Yeah.
But if you were to look into your crystal ball right now and say, even with the uncertainties, there are some things that we can predict, what would you say?
I would say that we are still in a good, optimistic place. I think the fundamentals in India are generally still good. From what I can see from within my own firm, when I talk to other firms also, the pipeline is still strong. Right? So that gives us hope that at least people haven't sort of started to discount the global factors completely. I mean, I feel like the levels of busyness have come down. That may not be the worst thing in the world, but in any event, the market is still holding forth. And I think most companies are they've seen now a good run of 5 years. And I think people see that this is a great viable option. And, given what SEBI has done to also accommodate, like I said, right, PE funds being a promoter, giving the option to startups to list even though they don't have the numbers, right, where they have to show a path to profitability, but at least they are willing to, to be able to come to the table, right? So I think those are very, very helpful regulatory changes by the SEBI to ensure that the market still stays good as a viable option for exit. So at the moment, I don't see any major change. What I am worried about is this kind of flocking to IPO. I don't think has been fully thought through by a lot of the companies. I don't know that they are totally ready for what is to come.
Got it.
It'll be interesting to see how many of them have issues after they've listed. I mean, we're already seeing some of the share prices going below the issue price. But to me, that's not really the main issue. The issue is, have they understood how complicated SEBI's corporate governance norms are? Just having the independence on the board is a check in the box. But if it's a true independent and they're going to question you, it's going to be, it's not going to be so easy to manage as it was in your previous unlisted avatar. So I'm not sure they've fully understood and appreciated how complicated, you have to really have an army of people who manage the regulatory compliance, your board meetings, you have to report as soon as, there's a material change or a material event. So I feel like those learnings will be interesting to see how many of them actually are able to do it without faltering.
I'm wondering, and I hear what you're saying, and I think that maybe this is just part of the evolution, right? It's exactly as you said, there were mistakes that were made sometimes early on in terms of how capital was allocated, and then there were corrections. And so there is going to be, I think, like a whole slew of IPOs, and there are going to be some learnings that founders after that are probably going to benefit from, because you suddenly realize the rigor of that process.
Exactly.
It's a necessary process.
Absolutely.
I don't know that there's a way, just because of the stage that we're at, I don't know that there's a way for us to bypass it.
I don't think there's any shortcuts to that learning. And I feel some of those will be experiential learnings, not just learnings from other people. So I think some mistakes will get made, some problems will happen, some people will get hauled up. You can see the SEBI is very watchful. So, these things are going to get picked up. So, it'll be interesting to see. I mean, there's work for me, so I'm happy about that. But
and on that, you talked about SEBI. Is there anything else that we as funders should be keeping an eye out for, should be tracking? Are there regulations or regulatory shifts that you're expecting?
I think the SEBI did come out with a recent slew of amendments, which have been good. Again, they've allowed for the reverse flips and the ESOP holdings, to be counted for promoters to continue, because our Companies Act does not allow that. So I think these positives will certainly come about as important milestones, which will improve our access to the capital market. From a regulatory standpoint, I will say that world over, regulatory agencies are becoming more and more watchful, right? And it's not just the SEBI, it'll be the CCI, it will be, your Ministry of Corporate Affairs, things like that. So, I think it is important for companies to invest the money and the people to make sure these mistakes don't get made, right? Because, people shouldn't just necessarily believe that they can have a phone conversation with a competitor and try to rig a market. The CCI is so sophisticated in the way that they function today that these mistakes are just fatal.
Yeah.
Right. So, so these are areas where I feel that, our jugadu mindset can become a problem. I mean, we've done very well for all so this far. Time. Yeah. But I think the more sophisticated, and again, with, AI tools and market scanning, and intergovernmental conversations that are happening now. We had a case where an SEC filing, which had just one line about India, got picked up by the ED here. And, the company was asked to explain why, what was the reason for that, what had happened. And it's, once, these questions start to come about, people get into trouble, right? Yeah. So I think it's going to be very important to remember that the regulatory agencies are just ramping up their game. And this is the world over. And Indian companies are going abroad. They're buying businesses there. I think the rigor of doing a deal in Europe and in the US and in India are just completely different. I've sort of lived through this cycle now. Pre-2008 was a huge bubble where people went and bought a lot of companies. They hadn't done their diligence. They hadn't figured out how complicated the labor authorities are in terms of, trying to downsize those businesses, selling businesses. So the startups have to think about not just laws in India, but they have to think about their markets wherever they may be and how their regulators are thinking. So unfortunately, they have to have an army of lawyers, which is good for me. But yeah.
Just finally, kind of on the same lines of like trends and regulations, anything else that you are seeing coming up a lot that could be useful to funders or that funders should be thinking about and aware of?
When you say useful, what do you mean in the context of?
Through either supporting their companies on an M&A transaction.
Right, okay. So I think one, not a regulatory point, but certainly one very useful trend that we are seeing is reps and warranties in insurance.
Okay.
And I think that is something that has become quite the norm, both on the global scale as well as in India.
Exactly.
So one sort of way to think about it is that, you're selling a business. As a founder, you hold maybe 10%. The investors hold the balance of the company. Now, how do you stand behind the reps and warranties that are being given as part of the sale? The founder will say, hey, I only get 10% of the consideration. Right. So my neck cannot be on the line for 100%.
Yeah.
So, and the investors will say, okay, but my fund life is only so many years and I'm not going to be on the risk for business reps and warranties. I can stand by my title reps. So the via media that people are adopting now is basically an insurance product. And what that does is it takes away the pain for both parties. It's a premium to be paid, and now the premiums have also come down. So we are seeing sort of deals between 1.5% to 3.5%, 4%. And once that insurance product is bought, basically the buyer and seller has comfort.
Yeah, exactly. The seller has comfort, and the buyer is also not saying I'm liable for everything forever.
Exactly. So the risk is allocated to a third party who has, of course, also done their diligence on the company. So known risks are, of course, not going to be covered. Right. But risks that, could even extend to things like tax, which never used to be the case before, risks on fraud, these insurers companies are actually willing to bear them at a price. So the market has become extremely, savvy on what kind of product, and they're tailoring the product to the deal.
Got it.
And you can sort of, you can buy the basic policy, you can add extensions to it, you can cover things that otherwise may not be covered. So there's a lot of flexibility which is being offered. When I was doing that deal, which I was talking about in 2020, we went to the insurance brokers and we said, hey, we'd like to do this deal. And they said, can you wait to do it in the next financial year? Because our quota for India is over. But that is not something I hear anymore. Global insurance companies are allocating a lot more money to the Indian deals. Again, it's an extremely useful tool when you're doing a global deal, an Indian buying a US company. The insurers are very sophisticated. US market has already adopted this. It's a very standard kind of product by and large. So, so it's a great opportunity for both parties to buy peace.
Yeah, it sounds like a great kind of tool and instrument, as you said, for kind of closing that.
Exactly. Because the seller can go home and be at peace once he sold his business, and the buyer knows that there is a cover for the unknown risks. And the known risks, you find a way to price that. You find a way to
that's part of the diligence.
That's part of the diligence, and you can decide whether you want to change the purchase price or you're willing to take a specific indemnity from the seller just on that, and that makes the conversation a lot more amenable. Especially in the cases where the founder, let's say, does a rollover into the resultant company, because then the conversation is not awkward about hey, this is an issue that we spotted. How do I now take it out of the purchase price that I owe you, when you will sell those rolled over shares to me, because you're still there in the company, you're working. So it's very, those awkward kind of situations are also taken care of by this this new way of doing things.
Okay, excellent. So now we're going to switch tracks a little bit. And I think the context for this that I also want to call out is, that Kos and Trilegal have been kind of long-term friends and supporters of women in investing for a reason. You've been quite vocal about the fact that you don't see enough diversity in the tech ecosystem. What is, and it's been 23 years of you talking about this. So what is missing? What's the unlock? What do you think we need?
Yeah, there's no one answer, and we could be doing this all day, I think. So, I mean, look, I think and DEI has become a bad word, and that's a very unfortunate situation. But I mean, at least from the people around us, people like you who are talking about this as institutions that you're building in order to give people the platform to talk about it, to make a difference. I think we have to just continue that journey, right? We have to keep talking about it. We have to be able to bring people into the conversation, give them the platform. There has to be sort of an ecosystem which is allowing more women to be taking up things like STEM. We were just at a dinner the other day and we were talking about a business that is in mechanical engineering, and she said the CEO of the company basically said there were 6 women to 100 and something men. And she says, look, I want to make a change, but I don't have people from colleges.
I don't have enough pipeline.
I don't have enough pipeline, right? So even if I as a woman want to make a change, how will I do it? So there are different ways to actually tackle this. Now, the good thing for us as lawyers is that at least we have a lot of women, people who are joining the profession. So even for us at Trilegal, we are, I think, 60-40 in favor of women at the fresher level. And, there is still a problem in the mid-level. You do see a lot of drop-offs, but it's very good to see that at the partnership, we're about 30% women, which I think for an all equity model, that is really something that I think we're better than maybe even the American firms. I mean, there's a lot that has changed. There's a lot that needs to change, but it's all about us continuing to talk about it. When you go into a room and you find that there are only men, these days I make a point to sort of
call it out,
half jokingly talk about it, right? And then you will find that, next time there will be another person. Sometimes that's tokenism, but sometimes it's actually legitimate, right? So I think we have to keep doing it as a daily affair almost. And hopefully by the time our kids come up, this problem will be solved to a great extent. And as you and I are mums of sons, I think we have an extra onus.
Extra role.
Yeah.
So that is women in the tech ecosystem. How do we get more women in boards and kind of address, because there are, I would say, some real and perceived risks associated with being on a board, but that's also a very, I would say, an important role to play.
Absolutely.
And there is a platform there. So then how do we get more women there?
I mean, the risks and the liabilities are the same, whether you're a man or a woman, right? So there's really no difference. And I think it's important to make that point. We, of course, tend to think a lot more about the role we want to take on, right? Because we're always like, board of a listed company, that means A, a lot more work, B, it means I really must be an expert in a certain sector. I don't necessarily see that thought process with the men at all, right? I mean, of course, they're being a lot more thoughtful about the kind of roles they're taking on, but women doubt themselves a lot more. And this is something that is, at every level of the game. So, there are so many certification courses that they could potentially do. I've seen boards where there's one woman, that one woman will find another way to bring another woman in. So it's about being prepared to take on that role a little bit. And, we also have to put ourselves out there. We cannot just simply say that, I'm unsure of the liability or unsure of the risk, so I shouldn't do it. There are extremely capable women today who are not afraid. And those are the people that we should be following. And being on the board means having to ask some of those tough questions. And if your interest is to ensure that the company has the best outcome, then, why will you not, play that role?
Yeah.
Yes, it is uncomfortable. Yes, it is difficult. But many women that I find who join boards have kind of gone through this in a way that they're not terribly afraid of taking on that position and asking questions, because they've been sort of at the receiving end for many years. Now they've, grown a bit of a thick skin. But certainly, go through the certifications that are necessary. Make sure that you're talking to other board members, within that company's board, or again, as a network. I mean, there's a lot that can be done, and diverse boards build for better companies, right? I mean, I was surprised to hear that the board of a food company that sells basic things like idli batter, dosa batter, does not have a woman at the CXO level. I was incredibly shocked. I was like, how are you representing the consumer? Because the decision maker to buy that is a woman. So, I mean, I was really confused by that, but I didn't say anything beyond that.
Except that I'm confused
exactly
by the situation.
I mean, he saw my face and he could tell that I was very, rather flabbergasted by his answer.
All right. We are coming to the close, but as always, we want to put you on the spot a little bit just before we wind up, and we'll get into a rapid fire. So as soon as you're ready, we will jump in. Okay, so a hobby that you recently took up that is filling you with joy.
Not a hobby as much, but I think fitness is extremely important. I hate going to the gym, but I do it. So I don't love it, but I do it. I like to play tennis, so that's something that I like doing. I mean, it's both something that I like to do because it de-stresses me, but I also think it's important for women at our age, to have a fitness regime that will take us through the next few years of our lives. It's not going to be easy, as I've been told. So it's certainly very important to keep that lifestyle up. It is really hard to do. There are days when I just simply don't have the time or the inclination, or I haven't slept well at night, and I'm like, I don't want to go to the gym. I don't want to do that. But when I do go and when I come back, I really feel refreshed. So it's not a hobby, and it's not something that I terribly enjoy. But I think it's important to do, and therefore, I pledge that I will do it.
Moving on to more pleasurable things. A book that it doesn't have to be a recent one.
Sure.
Something that you just highly recommend to everyone, that maybe when people join the firm, that you say, you have to read this book.
So it's very interesting. I used to read so much as a child, but I reached a certain age after which I was like, I cannot read, because every time I'd come back home and open a book and fall asleep. So the good thing is I found Audible now, and I feel that is really reviving my interest in reading, and well, I call it reading with quotation marks. But a recent book I read was actually Nexus by Yuval Noah Harari. And it was very interesting because it's topical. It's all about, what does AI mean? And in the world we live in today, I think that's a very pertinent question that we need to ask ourselves. I'm personally not a big fan of AI, but but
we
it's
still
here
need to grapple with it.
Exactly. It's here and we have to deal with it. Right now, we have to be careful about what it can do and can't do and how it distorts, realities that we live in. And I think it's very important, therefore, to have a full understanding, or as much of an understanding as possible, around that topic. So I think that could be an interesting book for the young people who are coming into the workplace, because legal tech has become very fancy, but the dangers of using that are really not being thought through by a lot of people. So so that's maybe one that I could suggest.
An investor or operator whose work you really admire?
That's a tough one, Maya. There are a lot of great people, a lot of people who've broken the glass ceiling in so many ways. There are people who really opened doors and changed things. So I'm not sure I could name one. And unfortunately, as you grow older, you see so many sides to people that, some things will agree with you and some things won't. Like, if you had asked me this maybe a month ago, I would have said somebody like a Serena Williams. Because although she finished her career as a tennis player, she has a great entrepreneurial brain and she's been doing a lot of work with Black-owned businesses, things like that. But I was not terribly impressed with her weight loss drug. A, use, and B, the way she promoted it. So that was troubling. So unfortunately, as you get older, I think you become also more cynical. And anyway, I'm a lawyer, so I'm sort of born to be a cynic. It's difficult to say any one person catches your fancy for all the time. You'll admire people for different things which resonate with you. Yeah.
So let's assume that you're not a cynic. If you were not a lawyer, what would you be?
I have tried to answer that question in so many ways and I haven't found a good answer. I really don't know the answer to that question. Unfortunately, I think I was, I made my mind up to be a lawyer when I was in grade 6. So I really never even explored any other option. But I mean, more than being a lawyer, now I want to do different things with the law, which is also, the diversity agenda and those things. So I don't think I'll ever stop being a lawyer, but I want to do other things that can also be useful to society, work with NGOs, look at our Bangalore city. The topic of the day is potholes and garbage. We are running a cleanup drive in RMV to beautify our spaces and to transform them. So, I want to do those types of things along with the practice of law. It's not static. And I think that's, so I can't say there is a profession I would have picked. I would love to be the traveler for all ages, but that's not good. That's not going to happen. But so I'm a lawyer and I enjoy it even now, and I want to do other things alongside it.
That's a great place to end it, which is really thinking about using what you have as a lawyer, but applying it across. Because as you've pointed out, nothing is static, especially the city that we live in Bangalore, and so there are so many opportunities to use law for kind of common and greater good.
Absolutely. And, to lawyers, I say, do your bit and do the pro bono work wherever you can. I think there is a lot of fulfilling.
Find alignment, right?
Exactly.
Personal.
Absolutely. Absolutely. Yeah.
So on that note, thank you so much for joining us. This was fantastic. It was a lot of fun to talk about everything from IP and insurance all the way down to DEI. Thank you again for also supporting WII, and we look forward to more conversations.
Thank you, Maya. It's been fantastic.